what's going on, fam? We are just going to go over a little lesson of the Gann box and why I use that so much in my trading and how I use it to take trades and look at what price is doing. So first example we're going to go over is this trade that I took here at New York Open. Looking back over here, we have a balanced price range. Okay, you can see price going in on top of itself. I'm going to take the last down close candle that's in this balanced price range where we have price coming down and almost closing at the same level. And we're just going to use a Gann box that's in your tools on TradingView. Okay, we're going to extend it over here. Purpose of the Gann box is to look for plays at the equilibrium or just into discount or just into premium depending on where you're going. So let's go ahead and take a look at that on the 1 minute chart. All right, so here we have the Gann box pulled all the way over to the right from that 15-minute down close candle that was in that balanced price range before price expanded. And here we have on the 1 minute, we see price drive up, come down, and we get a nice entry right below 50% of that Gann box. So we can go ahead and pull this off so we can see it cleaner. We can see some relative equal lows. Candle bodies hold the 50% of that, which is what we want to see. And then we get a wick that stabs down in here, gives us a nice entry. And I was targeting this high, which we got in about the first 30 minutes of open. Real nice play for about 3,500. All right, so let's take a look at some other places where we can use the Gann box. So we ran buy side liquidity with this next run up, and we have these up close candles, and we have price that really dives down, and we're looking at, is this just a retracement and we're going higher or not? So if price was to rebalance down here and come down here, we would want to see it tap this actually and then expand up. The fact that it doesn't, and we got multiple 1 minute candles where the candle bodies are kind of holding in this level, in this fair value gap, what I like to do is I like to take a Gann box of the candle bodies, showing this is a balanced price range. And for our entry short, we're looking for anything in premium. So here we have 1, 2, 3, 4 entries short that you could have grabbed. Again, notice the candle bodies are holding the equilibrium point, so they're not breaking through this equilibrium point. That's very key. If we see candle bodies break through the equilibrium point, that could negate the direction we're trying to head. So here's another example on the 1 minute of using the Gann box. Really nice entries, very little drawdown. All right, so we got two areas highlighted. We have this balanced price range that was created before the Apple event run up. We had the Apple event run up and come up into this fair value gap in here and kind of rebalance this area. Okay. We see price then starts to make a move down, and we see candle bodies that don't immediately draw higher. Okay, so now we're going to highlight this top candle that's balanced with this down close candle body. See how they're of equal size. And now we're looking to take entries anywhere in the premium of this Gann box. Okay, we have candle bodies that hold 50%. They're not breaking through, which is a great sign. And what do we get? We get a subsequent sell-off in price. Coming back down to this area, that was a balanced price range. We haven't measured out candle body to candle body. All in here is balanced as price has rebalanced itself. Price comes back through. What we wanted to see was price hold this equilibrium point with the candle bodies it does right here, doesn't start breaking through. We get some nice wicks right above this swing high for a buy side liquidity grab right into this green candle. And then we have a nice sell off right there. We're going to come back to this area of price that leaves the balanced price range and comes below. And we'll talk about this area as well. We now have a candle that breaks below the balanced price range that we had measured out earlier. We could see the candle bodies held 50% and then breaks below. Okay, we have a fair value gap entry with this small entry right there. That's an institutional order flow entry drill. Candle bodies don't start coming back up in this area. So what I'm going to do is I'm going to take this candle that the high got ran, that's the bottom of this fair value gap, and I'm going to take a Gann box and I'm going to take this whole candle and draw it out in price over time. And as you can see, every time price gets into a premium, what do we have? Price comes up into this premium area, sells off hard. We have this reaccumulation stage in price. Price comes up into premium. We get nice down close candles. Price comes up into premium, nice down close candles. Now we have candle bodies that are respecting the equilibrium of this, which is a good sign, showing that price is not willing to move higher. All these wicks into this premium area are your entry points. And now we have price break below, and now we have candle bodies that aren't coming back up, and we have a nice sell-off. So looking at all the areas that we mentioned, we're just looking at price to show us what it wants to do with the candle bodies. We want to take entries short in areas of premium, and we want to take entries long in areas of discount. The only discount area I took today was this one right here, which sent us up here. And then I took an end of day short right up in here for this run down here. Okay, using the Gann box, this can help you identify areas of discount and premium. It's very simple. If you like this video and it helped you, if you want to learn more, go ahead and give me a follow, hit the like button, go ahead and leave comments in the comment section. I'm more than willing to go over price in detail and talk about these things in more detail. Let me know if you have any questions and if you found this helpful. All right, fam, have a good day.